Have you ever wondered how high IOTA might be going in that 2025 bull run that everyone seems to be talking about? Well, if so, you're in luck because today I'm going to be sharing my IOTA price prediction for 2025. As I get into this video, make sure to smash that like button if you're new, subscribe, and let's jump right down into the charts and take a look at what's going on with IOTA. So here we have IOTA paired up with USDT. We're on the 1-day 𝗕𝗘𝗪𝗧 chart. And well, this is a very interesting chart. Okay, now we don't need a whole bunch of fancy indicators to understand what's going on here. We're really only going to use two things, maybe three. If I reference it, it's going to be the exponential moving average, right? So what we're going to use is we're going to use a Fibonacci retracement tool. This is a super simple yet powerful, and if you're not using this, you need to start using it, right? It's built into TradingView. It's completely free. You can use it with a free account on TradingView. If you're looking for TradingView, there's usually a link in the description. If there isn't, then join us in our free Discord server. We've got loads of links and various different things down there. And well, this is a fantastic tool, but it's not standard, right? I've altered this a little bit and I'll show you why. So here we have all the settings for the Fibonacci retracement tool. You can feel free to pause this at any point and obviously copy these down if you want. The first thing that we need to kind of address is that yours all, if you're brand new to it and you're just drawing it on, it's going to be very colorful. You're going to have red, greens, yellows, and various other things going on, right? I've removed all the colors and just replaced it all with white. And I do that by obviously clicking into this little area here, choosing the color, choosing the opacity, and all that kind of stuff. Now I do that because I need to be able to clearly see what's going on. I don't care if it's in a red zone, green zone, yellow zone. I don't care about that. Only thing I care about is seeing how the price is reacting to these key levels, right? Of which I've changed, right? We've kept most of them, but we've turned a lot of them off because they're not actually that useful. So in here we have 0, 0.236, 0.382, 0.5, 0.618, 0.786, 1, 1.618, 1.382, 1.236, 0.702, 0.882. And I do use this one down here from time to time as well. This is 1.272. I turn it off simply because it's so close to 1.236, but it's very powerful and we do need to use it from time to time. So I have it there and I turn it off for the majority of the time, and when I need it, as those exceptions come in, I will turn it on. But those are the settings, right? And if you scroll all the way to the bottom here, the most important setting is the fib levels based on log scale. Okay, this is off by default. Okay, so as you can see, my Fibonacci that I draw on here at the minute, right, this chart retracement tool, if I untick this, all those numbers change, right? This is what it would look like by default if you're using your chart on logarithmic, right? So I have a logarithmic chart, and if I just started drawing the Fibonacci on, well, I'm going to end up with something like this, and that's not usable. It's incorrect numbers. It's not giving you the right insights. You need to go ahead and actually click this button here, where it would actually go ahead and actually put things into a log scale so you can address what's going on. Okay, so that's off by default. So if you're using a logarithmic style like I am, you have to tick that on separately. For those who don't know, it's this little L button right down here in the bottom right hand corner, as you can kind of see over here. If I untick it, that's what your chart looks like when it's not in logarithmic. And then you can tell me whether you think that's usable or not, but for me, that's what it looks like when I have it on. Off, on, off, on, off, on, right? I have it switched on. So that's the first tool, right? The second tool is Elliott Wave. Now, Elliott Wave is super powerful. It's a very predictive tool, okay, or price analysis tool, if you do it correctly. It's a complicated subject. I put together a whole course on it. It's over at 𝗕𝗘𝗪𝗀𝗀𝗏𝑐om. It's linked in the description down below. It's worth understanding it, in my opinion. Now, I don't think I've got any ongoing coupon codes in the description down below, but if you join us in our free Discord server that is linked in the description, I will probably have some discount codes available to anyone who is seriously interested in using or learning Elliott Wave theory and how to use it within their own analysis. Ultimately, Elliott Wave is driven from either a 3-wave movement or a 5-wave movement. There's many different types of each of these. There's lots of rules around them. But for the most part, that is Elliott Wave. It's basically 3 waves or 5 waves, right? They can go in both directions. There's lots of fancy names for this stuff, but it's simple 3-wave or 5 waves, right? The yellow 3-wave patterns are all corrective. That means that they're short-term moves, although that might happen across multiple months, depending on what time frame you're on, but it's a short-term move. And then you have a 5-wave move, like the one in white here, and that is known as a trend-based move. Okay, so knowing the difference is quite important, right? Are we trending or are we not trending, right? So anyway, that's Elliott Wave, and in conjunction with the Fibonacci retracement tool, it's an insanely predictive tool. Okay, so Sorry for the 4 minutes 50 intro on the tools and all that kind of stuff, but it's very important to understand the base level before we get on to the rest of it. And no doubt, since I know that I think like there's like a retention of only 30% on these videos, like basically that means that 70% of the content is being skipped, right? People aren't watching 70% of the videos, they're only watching like 30% of the videos. So we do know that people are missing a lot of the context, but I can't help everyone, right? So here we can see the price action of IOTA across the years. And that's really good, right? The more data you have, the better this thing is going to be. So we have data that runs from December 2017. We have the very first bear market that we can see here for IOTA. Okay, and it's a good one to kind of get a good bead on, right? So here you can see that we had, if I can snap this in, let me see if I can zoom in and snap that to the wick high. Wow, it's super fiddly today. It's not even the chart, it's just me. Anyway, there we go, right? That first initial drop was 98.57%, right? Pretty bad. Then, of course, we get into this move over here. And this is an interesting one, but as you can kind of see, we bottomed out over here. And again, using the wrong tool, we bottomed out over here. And we had this drop from the higher side, which was again, do it in the right way, because you've got to start at the top when you're going down, right, rather than starting at the bottom. So here you can see this was a 96.21%. So your bear markets are very much consistent with each other, right? They basically show us that, yeah, the market is very, very corrective. But one of the things that's really interesting is that we didn't actually go down into lower lows, did we, right? We have a really big crash in the market, but it wasn't as low as the 2020 crash, right? The March COVID pandemic crash that we had. So we know that there's a strong foundation down there, and we can already see at the point of recording a strong reversal in the market. So we know that the bear market bottom is in. It was a 96.21% from 2021 into 2024. I believe that is August time, actually November time. So really interesting moves for IOTA. Now, this is the opportunity to see some significant gains in the market, because in the previous bullish market from the COVID crash, the pandemic of 2020, if you will, we can see here a pretty nice run to the upside. It came in at 3,000%. Sure, there were better projects out there that did more. I mean, you've got things like Polygon did 45,000%. You have Cardano at 17,000. I think you had 25,000 on VeChain, things like that, right? But we can see here that there's still the potential for further lifts to the upside. So let's go ahead and start using the Fibonacci retracement tools, because there's a few things that we need to consider, right? If we measure the kind of initial drop here for the retracements that happened afterwards. Okay, so we're going to start at the very top here, which is the 19th of December 2017. We draw this all the way to the very bottom for the March 2020 crash. Now, I know that it seems like, how's all this history relate to 2025? Well, it's very important to understand how the market was behaving back in the very early days, right? Because chances are the market behavior doesn't shift and change all that much, right? People generally expect the same things to happen after certain things happen, right? So if you have let's say, scenario A happened before and you start seeing scenario A repeat itself, well, the behaviors after what you saw will generally repeat themselves. Now, what's really interesting about this is, obviously, as I started to pull that chart over to the right-hand side, you can see that that was measured from the high side to the low side here, right? So you have 0 on the low side and 1 to the high side. And as we kind of retraced back to the upside, you can see the Fibonacci basically finding, or at least the people, the participants, the buyers and the sellers reacting to these key Fibonacci levels. And it happens to be time and time again that you find that this is the behavior. Okay, and you can see it over and over and over again. Okay, so understanding that is going to be really important for us moving further forward into 2025, right? We know that the market is going to be heavily traded by traders who are going to react and obviously emotionally react to the Fibonacci levels as well. Now, I'm going to emphasize that I think we are still retracing to the upside what we saw back in 2017. Okay, so when we think about that, that means that we haven't actually finished. Although it's been a bear market, we are still actually in the kind of territory where we might see IOTA climb a little bit higher. Okay, I'm not suggesting that we go back to $6, but I do think there's going to be some interesting stuff going on. And the reason is you can also see how right now, as I move this across, how that price action is still reacting to these Fibonacci levels, right? So you can see here, we were kind of reacting to these 0.382, right? And you can see here, it's pulled up towards the 50 level and come back down towards the EMAs. Okay, so for the Fibonacci there, it's working out quite well. Now, this might not be the most ideal one, so this one, I'm going to move this all the way over to the right-hand side because I don't need to see this one in too much detail at this particular stage. What I do want to do, though, is measure the previous bullish market. Bearing in mind that what I've measured so far and what this Fibonacci retracement tool represents is the 2018 bear market. Okay, now I want to know, how did 2021's bullish market go? Okay, so I'm going to measure that peak that we had up in 2021, which is right here, okay, coming in at $2.66.96, and the bear market low point of March 2020. Okay, now, if I go ahead and do the same exercise and I start shifting that measurement from the left-hand side to the right-hand side, as we kind of dropped back down, you can see how the price was reacting to it. Again, even in the bearish times, you can see how the price is reacting and kind of adhering to these Fibonacci sequencing levels. Okay, so I'm going to continue to move this over because what I want to do is I want to see how we have kind of behaved for the actual reversals that we see going on at the moment, right? Because we had a 2020 low point of 8.59 cents, and we actually have a significantly higher level right now. Okay, we didn't drop down into that bear market lower than 8.59. That's kind of what I mean. So here we can see that as we start to kind of have this reversal in the market from the kind of November 5th low point, well, this has been a very strong move to the upside, and it hasn't really yet reacted to key Fibonacci levels outside of the fact of the 0.382, which is where we currently find ourselves in there finding support, not only on the 50 exponential moving averages and the 50 EMAs, but you can see it right there as well. Okay, so this is important, right? So we note that that's, kind of seeing the market kind of react that way. But this particular kind of structure that we see here is very impulsive. This is giving us the idea that we are in fact now trending to the upside, but it's on a smaller scale. It's not on a big scale. Now, I'm going to go ahead and take that Fibonacci and I'm going to pick it up this time and I'm going to put it onto our 5th of November low point, which is this wick right here, or it's actually the 4th of November. That low was 10.11 cents. Okay, so I'm going to go ahead and make sure that my Fibonacci here is on 10.11 cents, and you can see that right there. Now I'm going to go ahead and just delete that other one off. I don't think we need it for now. So here, now what I've done is I've measured that initial bull market, okay, from here, and I've just moved the Fibonacci to that level there. Okay, I haven't altered it in any way. I haven't changed its levels. I've just moved it over. The reason that I wanted to do that is I want to see the strength of this move here in relation to the strength of this move over here. And this is really important for Elliott wave, okay, because if I don't knock the camera there, Elliott wave tells us that because this is potentially a trend move to the upside here, we've come down here in a bear market, we might be looking for this move to the upside over here. Okay, and that gives us kind of a bullish idea and a bullish target of $3.14 to $7.06. Like I said, I don't think we're likely to break higher, but again, it's an interesting one to keep an eye on. Okay, so knowing that that's the kind of potential target range, how is this price behaving at the moment, right? What is going on with that price action at the moment? Well, we can see that we got rejected on the 50% level. We've come down, tried to find support on the 382. We didn't. We found support on those moving averages instead. And we're right now finding resistance on that 382. Okay, so that tells us that the market is still responding and respecting the Fibonacci levels. And the Fibonacci levels relate to the Elliott wave structure. So for the most part, this is actually gearing up to be quite strong. Now, is this technically a ABC structure? I don't believe it is. I actually believe that this is more likely to be a WXY pattern. So what's the difference? Well, the difference is structure. Internally, you have ABCs, and it's actually labeled up as a WXY when you have two ABCs next to each other. So an ABC structure is here, A, B, and C, a little bit irregular, but nonetheless it's there. And I suspect that what we're doing here is an A wave, which I don't think is finished yet, a B wave into the summer, and then a final C wave. So what do I think is the most probable outcome? Well, I don't suppose that actually we're going to have a fantastic bull market, but I would love to be wrong about that. Now, if I zoom out of this and we start taking into consideration what that might mean for the price action, well, I suspect that there's going to be a huge pocket of resistance. And I'm going to think about it. It's actually relatively broad. This is a multiple year one, right? So we want to kind of give ourselves a little bit of thinking space here. But the main resistance is where I think we're going to find the resistance for the price action in 2025 is going to really be around that 786 out towards the 1. So for me, I would be looking to dollar cost average out of the market on IOTA anywhere around $1.50. Up towards $3. I don't suspect it's likely to go higher than that. Then the sentiment's looking okay at the moment. The market movements are looking good, but overall, I think there's a limited amount of growth potential in IOTA for the 2025 cycle. Again, anything above though these numbers, like if we get a strong breakout above $7, well, that's price discovery territory, and well, you can throw this analysis out the window at that point. We'd have to really take a look at the internal workings of what's going on and track those wave structures on the smaller timeframes to really understand what is going on. But as it sits today, looking at the data in the charts and how everything is kind of forming out and how the buying and selling behaviors are respecting all of those kind of Fibonacci levels and the Elliott wave structures, I would say, yeah, somewhere between $1.50 and $3, although that seems quite broad. I suspect there's going to be a lot of resistance in this upper area between $1.50 and $2. So if you can get above that, then you have a shot at somewhere between $3 and $7. But of course, guys, it's just my thoughts and opinions on the data in the charts as I see it. What do you think? Let me know in the comments down below. If you have enjoyed this, make sure to subscribe for more content. And guys, if you haven't done so already, you need to check that video out right there. It's one you don't want to miss.